Aren't you interested in learning breakthrough wealth building strategies, such as how to flip a home in less than 2 weeks using other people's money with no real estate license, or how to build a low-cost home-based business? You can discover how to take passive income from any source and invest it into real estate, stocks, or business to become financially independent investing in any market with Residual Roads Business Institute. Collaborate with Andre and other Residual Roads advisors to create a free action plan and start implementing strategies today. Go to www.residualroads.com or email info@residualroads.com. Welcome to the Investing Uncensored podcast. You've been searching for different ways to become financially independent or generate passive income to live out your life's purpose as you've seen others do it, but need insight on how. Well, get excited because here you'll discover the tips and resources to fulfill that need. Andre Stewart has spent more than a decade successfully making it happen for himself and others. This is the Investing Uncensored podcast. And now here's your host, Andre Stewart.
Welcome to another episode of Investing Uncensored. I'm your host, Andre Stewart. And today we're going to be talking about how you should be investing in real estate in 2022. Looking at all the factors going on with the government, with them talking about raising interest rates 3 times next year, a lot of people may have the feeling of, fear of missing out. So a lot of people may start buying homes at the beginning of the year once the holidays get through. Typically, real estate normally slows down right after November. So there's usually not a lot of home buying during that time frame. And then right around the third week of January, it picks up. So I'm expecting to see a lot of home buying, I would say the third week of January and onward, especially picking up around the springtime or in the summertime. With them talking about raising interest rates in March and then probably again in April, I do anticipate there being a market correction in the stock market and real estate, which you guys heard me say that before. So I think that's going to provide, or I'm going to say put pressure on the economy. And with that pressure, we're going to have another recession. And I've talked about before a double dip recession. And so I think we're going to have a lot of opportunities to buy homes from people that are in need of help. You know what I mean? So the strategy that I use typically when there was not any kind of calamity going on with the economy, you can always get houses from people that are getting divorced, someone passed away, probate type of things like that. And in these kind of scenarios, you can get a house from someone for $7 or $8 grand or 10 grand. You just basically have to go in and pay off the arrears. So in situations like what I just explained, people tend to stop making payments because, again, if it was someone who passed away and it was like, I'm giving this to my kid, there could have been a mortgage on that house. And so that new family has to assume that debt. And a lot of times they'll end up not being able to carry the note on 2 properties. So they'll end up letting that one go. And then, with proper marketing, you can get them to reach out to you and they'll, basically give you the house because they don't want it anymore. So you can usually catch up the payments and pay off the, so let's say $7 grand. And then you take over this house. And if this person had lived in it for a long time, it could have a good amount of equity. If they, had a mortgage on it for, let's say, 15 years, they probably paid it down to a substantial amount. And so now you just have to come in and pay off the arrears. And then you get to take over that house with the existing loan in place. So you don't even have to get a loan. You don't have to do anything like that. You just basically take over the payments. And people are willing to do this. We've done this quite a bit. And people are willing to do it because, again, you either lose the house and you get nothing. If it's someone else, like your grandfather or your mother who had it and they passed away, you don't want to carry the mortgage and do the upkeep on this other house. You know what I mean? It was a gift to you. So you're more than likely willing to sell it and, take profit from it or whatnot. But you're definitely not going to want to pay 2 mortgages. So people tend to even in a divorce, people like, they don't want those memories of that relationship sometimes. So they'll be willing to give up the house or someone relocated and they couldn't sell their house in a fast enough time. I think these are the opportunities that are going to arise, in the spring or summer of next year, especially when they raise rates. So there's also people that left during 2020 because they left, major cities because of, all that was going on, and they bought houses. And so now some of their employers are requiring them to come back. So they're not going to pay rent in a major city or buy another house in a major city and then have to pay the mortgage on this house that they bought thinking they were going to be able to work remote forever. So you have those opportunities out there. And then, just the basic things that come along with the recession. So you'll have more people who couldn't find jobs, people that definitely did the Great Resignation. Those people thought they could, I don't know what they thought, you know what I mean? I'm not them, but they might be in a situation where they try to find a job now and they can't find one. And so they might have had a house. So there's going to be a lot of opportunities for people to go out there and do what is called pre-foreclosure investing. And that's really where you make a lot of money at. For example, we had a house in Georgia before the pandemic hit, and it might have been 2018. And it was a young guy. He might have been like 25. He had a house, but he couldn't afford it anymore for whatever reason. And so he was back on his payment, $7,000. We came in, we paid the $7,000. We found him an apartment to put him in. He signed over his house to us. We even said, hey, can you take care of 2 more months so we can get the rehab done? And so he paid up 2 months in advance, and we paid the $7,000. He had a little bit of money, but not enough to get himself out of the situation. So he was willing to, put up 2 payments. We did the rehab. The rehab was very basic. It was maybe the house is like $2,000. It was a really nice house. And so we only had to go in and put new countertops, new carpet. We painted it. We stained the back deck. And so for $14,000, we were able to make $43,000. So we put up, the $7,000 in the rears, the $7,000 for the rehab, and then we put it on the market. And so it was 35 days, we made $43,000. This guy was happy. We paid off his mortgage. The difference between the mortgage and the equity in the home at the time was $43,000. So he was in a good situation. He didn't go into foreclosure. It didn't go on his record. He moved out into an apartment. He's 25. He still got his life to live. He can go get a house, in 2 or 3 years. Had he not done that, then he wouldn't have been able to get a house for 7 years. And so he would be in his, mid-30s before he can get into the house. So it worked out. Some people look at this type of situation and be like, oh, man, you're taking advantage of people. We're not taking advantage of people. We send out, specific marketing material, and that person call back. And if they call back and they need help in their situation, a lot of times people kind of want to stay in the house. But why would you let someone stay in the house if they couldn't pay the payments in the first place? So that's something we typically don't do, but we will for sure try to find them a place to go and not just put them out. And we might give them $1 or $2,000, but in essence, we're paying out their mortgage. And sometimes we have to carry the mortgage for quite a bit to get the rehab done. And so with that, their credit, kind of corrects, because what if you had to hold on to it for 6 months? They haven't been paying on it for however many months, and then they get to catch up their payments. So it shows that they got their situation together if they try to go to get another house in the future. So we also do that. A lot of times with this strategy, what you could do, my mentor, he did this, and he has a ton of houses. You just got to be careful, because once you get to a certain amount of houses, as far as loans go, then you have to get some kind of accreditation, which, for the amount of money that you can make on the cash flow and the equity on the back end, I think is worth it. So what he would do is the same scenario. He would get the house, he would catch up the payments, and then he would just do the rehab if it needed it. And then he would obviously move that person into another house or an apartment. And then he would just carry the mortgage. He would like, hey, sign over your information, or sign over the deed, which is what they do. And then they give you access to the online banking portal, and you start, you just change the information up and you start making payments. So he did this quite a bit. He would change the address for the mortgage statements to go to his house, because again, he owned the property. And I think people think if you have a loan on a house, you can't separate the deed from the loan, which you can't do that all day long. They're 2 separate things. Sometimes there might be a clause in some particular loans, but for the most part, if that's the case, then you can do like a second lien position. But for the most part, someone can sign over the deed to the house and still keep the loan in place. You know what I mean? So the loan is basically securing the asset. And if you sign over the deed and the person is still taking care of the loan, then there's no issue with the bank. So he would just go out and do the same strategy that I just mentioned, and he would just sit on these properties. He would keep them. He would keep them for, 5 to 10 years, and he would do something called a lease option. So he would go out there, find these houses, like the scenario that I gave, and then he would get them, clean them up. He tries to just stick with carpet and paint, which is what we advise too. Find houses that only need that, and you might spend $2,000 after you've caught up the payments. And then he would do a lease option to someone who kind of had okay credit, but not enough credit to buy a house. And he would do a lease option for $5,000 or $10,000. And if this person decides to keep the house after the lease option expires, the $10,000 that they put down, he would roll that into the loan. So if it was $180,000, he would roll that $10,000 in. So now they only got to pay $170,000. And so that's a good strategy. So he went about it. He never really got a lot of loans. I never did that strategy. We typically buy them from the people and catch up the payments, and then we'll turn around and sell them. That just made more sense for what I needed. But I think that's a good strategy going forward, because if you see, look at the housing market. If inflation continues like it should, the cost of housing will continue to go up. They're raising rates to try to prevent this from happening. So there's two things that can happen. You could buy a house and the price could turn on you, and then that house will be worth less. It'll probably be worth the actual real value of it and not the inflated price. So either way it goes, it's still fine. But if you sit on a house for 2 to 5 years, the price is still going to go up. We won't have this 20% increase that we've had over the past year and a half. But I mean, it could go up 7%, maybe 10%, depending on the market that you're in, which is still really good, especially if you have someone in there paying down a mortgage. You're getting cash flow from that. You can do a spread between what you're charging them in rent and what the mortgage payment is. So you're making a cash flow on that. It could be $150, $200, but you're still cash flowing from that. And then they're paying down the equity. And then you got $10,000 from them up front. So, I mean, it's a win-win. And then you get the tax write-off of this property as well. So to me, this is the kind of strategy that people should be looking at doing, especially considering what's about to happen. Who knows what's going to happen with the market. But even if it doesn't turn and we don't go into a recession, this is still a great strategy, because all those people who were in forbearance in 2020, they're coming due. So there's a lot of houses in the market. I remember all of 2020, I couldn't find a house. There was 0 houses. And, with InvestFar, I get a lot of properties from asset managers, and I was reaching out. They was like, man, we're dry. There was nothing anywhere. And then right around September, it flooded. September of 2020, I just got so many houses. It was out of control. I'm sorry, September of 2020, I got a lot of houses. And it just continued now. So I always said back then, we're going to get an influx of houses come January, because the forbearances ended in 2020. And then some people I know, because I do refinances of loan, they're still doing forbearances. This guy just got an extension from one that he had all the way until, I think it was February. Or it might have been April. I think it was April. So he got an extension all the way until April. So this is still going on. And he's trying to sell it at the same time or refinance it, which will help him out. But if he can't, because there's a lot of people out there that can't do that, these are the kind of opportunities that you want. This guy that I'm talking about had 3 houses. He had to end up selling 2 of them. And then there was this one that I was going to refinance, which he ended up, so something else worked out to where he didn't have to refinance it. And he still, like I said, got the forbearance. But if you know that there's a lot of people out there like this, and it's going to be even more, because some of that stuff only went to the end of 2020. And I don't know what the extensions were on those, but we're at the end of 2021. So all those houses from 2020 and the forbearances that might have been extended through 2021, they're coming up. They're coming up. And with them, changing the interest rate, plus or minus, whatever they're going to do, I think there's going to just be more opportunities for these type of deals. And before the pandemic even happened, there was a bunch of houses like that anyway. So even if you go with the regular market, there are still a ton of houses that you could find with proper marketing to secure deals like this. The market goes in cycles. So for all of 2020, all I did was fix and flip houses because there was a demand for it. There was a supply shortage of houses that, for one, we're a 4 million deficit of houses. And then at that time, there was no houses on the market and people were looking. So basically anything that you found and you rehabbed, because there were no homes, people were buying them. I mean, the houses that we had were just, they were gone 30 minutes, 6 hours. It was crazy. So 2021, houses were going like that. 2020, there was no houses. And then 2021, we kept the same trend from 2020 with finding houses and rehabbing them and selling them. And now I think that trend is ending, and people can still do it. I'm not saying there's not a market for it, but why would you go out there and try to get a loan for 150 grand and then try to, either put up 25,000 in rehab or try to get a rehab loan and do that when you can just go out here and find a property that someone needs help getting out of a bad situation. In addition, it only needs minor work. So you can easily find a house, catch up the payments on someone, let's say Georgia, Florida, Texas. It couldn't be no more than 7 or 8 grand, maybe 10 grand. You can partner up with someone to do that. And then, you can even partner up with the contractor if it's just carpet and paint and say, hey, look, let's do a partnership on this. Once this house sells, I'll pay you back or I'll give you the proceeds, or just partner up with someone else that might have some money. There's a lot of money floating around because of, the stimulus that they did. So you can either go on meetup groups on Meetup for real estate investment clubs or things like that and find someone who's willing to split the cost. Or you can just get this property under contract and go to a real estate meetup group or a RIA, real estate investment club, and say, hey, I got this property under contract. It's after repair value is $50,000 in equity. Boom. So you say you get under contract for $100,000, it's worth 150 to 175, and you don't have the cash to buy that property for whatever reason, whatever the earnest money, or what if you don't have the money to secure the property? Once you get it under contract, you basically have that property secured for whatever time you work out, whether it be 14 days, due diligence, and then you just go and you sell it to somebody else and, sell that piece of paper for 5 or 10 grand. So at the end of the day, there's still a market for it. So all you have to do is basically find the house. Go out there, get the house under contract. That's a good deal. Just, if you get the entire scenario and you say, look, I got this house under contract. The person owes $7,000 in arrears. It only needs carpet and paint, a little, TLC, but it's worth 165. Yeah, someone's going to swoop that property up without thinking about it. I mean, you can send it to us, info@investfar.com, and we'll buy the house, especially in a situation like that. And we have a ton of investors who would buy that as well. So, I just made your job easy. We also do financing, which we've said before. So if you want to, acquire that property and you have over a 600 credit score, go to investfarcapital.com and we'll help you get that house with the rehab included if you need to do that. But I think, again, instead of you trying to go out there and get a loan, it would be the exact opposite of what I'm saying do in this scenario, but you don't ever want to lose a good deal. But I would just go and take the 5 grand. I would get it under contract and flip it to somebody else and let them do the work. And then you just made $5,000. So this is what I would kind of be doing in 2022. And so, like I said, markets have cycles, and this is what I think the next cycle could be. At least for me, that's what I'm going to do. And it should be for you too, because, it's a lot easier to get into real estate investing, paying 7 grand to catch up somebody's payment and then taking over a nice house that doesn't need any work at the same time. But when I first got started in real estate, I did wholesaling. So the same thing I'm just talking about right now, I would find properties like this and I would be on real estate investment club calls and people would be on there talking about their deals and, what they're looking for. And so I would go out there and try to find it. So it's called bird dogging.
Have you ever thought to yourself, I wish I could get into real estate investing? You can change this as quickly or as slowly as you want to now. Imagine yourself networking and making new connections in real estate globally, or buying an investment property in a market or country that fits your needs. People do. They know what I'm talking about, and now you can too with InvestFar. Connect and join the network. Remote investing made safe and easy.
I think my first property that we found was a trailer home in South Carolina, and we made $3,500 on that deal, something like that. I just sold that deal to somebody on one of those calls. They hopped on a Tuesday. I said, hey, this dude like mobile home parks and mobile homes. So I said, hey, we got one. If you give us $3,500 for it, it's worth $45,000. There's a tenant in it right now, and you can go. That's kind of what we did. He took it over. I don't know what the lady's situation was. I can't remember, but he ended up even leaving her in there and took over the property and went in there and put new carpet. So it was a win-win. We got 35. That just gave us more money to put back in marketing for us to keep going. So this is what I will be doing from now until who knows when, because The hard part about it, I will say this though, is finding those deals. So in the beginning, when we did find these type of deals, we would do a lot of marketing. I think we would spend, and it's not even a lot. It was more time consuming than anything. We would put up $1,000 a month in probably marketing, but we would have to go on Zillow and scrub for pre-foreclosure leads. And we would put them in Excel. And now we had a software that allowed us to print specific letters to target these type of people. So it would be a letter that, says, if you're losing your home, or I heard you're losing your home, or we had a check letter offering people $25,000 or $30,000 to buy their home. So those kind of things got people to call you. And when they called, then you figured out what the scenario was. You go take a look at the house, and then you close on the deal or you didn't close on the deal. So that's the hardest part I think you will face with this, because you got to send out of that $1,000, we will probably send out roughly 750 to maybe 800 mailers a month. And we might get 10 phone calls back, and then we might close on like 2 of those. So it's actually a numbers game. It's a volume game. So that's kind of what I want you guys to expect. Don't think it's just going to be like, hey, the first mailer I send out, I'm going to get that. That's not going to happen. So, but these are great deals. I mean, at one point I had an investor, he's a friend of mine. That's all the deals that he wanted to do, because we did a couple of flips together prior to, him coming in on one of those deals. And he was like, man, I don't want any more flips. I just want to do deals like this, because the 2 flips that he did, they took 5 or 6 months. We overspent on a couple of them. So he was like, you know what? The only kind of deals I want are the pre-foreclosure deals where I can just, put up $7,000 and we take over the house. And that's kind of what we did. We did maybe a couple more flips after that, and they made money, but he was just like, nah, man, it takes too long. And so when you find these pre-foreclosure houses, it doesn't take long at all. And again, this was before the past couple of years. So imagine now, this is before we had this, the shortage of homes and all these other things going on. Imagine now, if you find a house like this, do you know how easy it would be to sell you could even get it on the contract and turn around and put it on the MLS that fast. And some people, it might be a little bit more difficult to find them, could be, because some people, if they are in a situation, they know how hot the housing market is. If they're smart, they're just going to get a real estate agent and list it. That could be happening as well. But a lot of times people try, or they're in in denial, because they think they're going to come up with the money before that house goes into foreclosure or before that auction date. That's kind of our scenarios that we ran into. People always thought they were going to be able to get the money, and then it comes down to like 7 days left, and we're rushing to try to get all this paperwork done, get the deed signed over. I remember it was one deal, it came down to the wire. We had like 15 minutes to get this wire off. And it was tight. And we got it off right at the right time. I had to send a screenshot, email it to the bank right then. So you will have situations that are like that, just so be prepared for those type of situations. Because again, if a person's been in a house for 10 or 15 years and they had it for a while and they ran into a situation, obviously they don't want to give up the house, but sometimes they have no choice. So they're going to wait until the last minute to do something like this. In the case with the guy who was 25, that wasn't his situation. He was ready to go immediately. That didn't take long at all. It was probably 1 or 2 phone calls. We went and looked at the house. So you might have people out there like that. And a lot of people are also leaving and going to different countries. So you might have someone who's like, you know what? Yeah, take it, man. I don't really care. So these are kind of houses I think you guys should be looking for. I think they're great opportunities for you to wholesale. We have a class. I mean, you can go to residualrows.com. We have a mentorship program that we teach you guys. We also give you the marketing material that I just explained to you. But it's a course. We have a couple of different courses that you can go on residualrows.com. I think the cheapest course is like $500, and it's a beginner course. But we break all this stuff down to you. We partner up with you on deals. And then we also give you, like I said, the check letter. We give you all the templates that you need to mail them out. And we go through, a couple of different strategies on how to find these properties, whether it be through going through different lead providers, finding properties that are 60 to 90 days behind. You can get leads for all of this. I mean, there's a bunch of lead sites that you can go to. Back when we were doing it, We use some of those lead sources and they work sometimes, but we got a lot of leads from just going to Zillow and changing the filters out and finding the properties that we needed. That's kind of where we made a lot of return. But again, that was a while back and things have changed. Technology has changed. So there's a lot of software out there that you don't even have to do the mailers like we were doing. I can't think of the name of this one site, but you just go in, you sign up, it has a monthly subscription, and then you can just hit a button and it'll send the mailer out for you and it'll charge your card for the postage. Versus you doing what we did, I would literally go to the post office and get, a roll of stamps, 2 rolls, that's like 200 stamps. And then I would watch the game and I would, put this information in the software through the Excel sheet. It would print out the information on the check letter or the letters, and I would sit down and I would fold them myself, put them in an envelope, stamp them, and then drop them off in the mailbox. Like I did that, and I did that for a while, and that's kind of how I got started in real estate, and it worked. And even now, I'm looking at a box of like 200 right here that I did over the week. So I still do it because I know that method works, and I know what the economy is looking like. So I'm thinking about sending them out at the beginning of the year because during the holidays, like I said, it's slow. People aren't really thinking about this, but they will be thinking about it, past the holidays. And so I want to be the first person at their door. So I still do the same method that I'm talking to you guys about because I know it works. Where did I get these leads from? I don't remember exactly where I got them from. I do know one of my partners, he has a software that I'm telling you about, and he sent me an Excel sheet with a bunch of names on it. And then, I think I got them from the Reddix. You guys should look at that website. It's called Vortex. And I got them from there. And you can go on there. I paid $39 a month. And I think you get 2 cities for $39 a month, either 2 cities or 2 states. And I picked 2 states that I know well and that I know that the market is super hot. So I picked Vegas, and then I did Florida. And I think it's it's got to be, I think it's states. And I just picked those, and Vegas is super hot. So anything you get in Vegas is going to be gone. There's like almost 0 houses in Vegas. And then Florida is same thing. Florida's on fire. I also got relationships with hedge funds that will buy anything in Florida. So again, this is kind of why I'm telling you guys to go about this strategy, because worst case scenario, you do find something and you don't have a buyer for it, which I doubt that, but you can always go to InvestFar and we'll buy the house. You know what I mean? So, and like I said, if you want to buy yourself, there's options for that as well. So I think it's a win-win. I think you just go out there and you do it and see what the benefits are. I mean, worst case scenario, you spend maybe a week or 2 weeks or a month doing what I'm saying, and you get a call back. You get one call back and you see that it's real, and it should motivate you, or you get a deal and then you can go out there and you sell it for $5,000. So I think this should be the strategy. I think this should be the play for people that are beginner investors, because you don't always have to be the person flipping the house. I think because of the mainstream media, people think fixing and flipping houses is the only way to get in the game. And that's not it. I mean, there's a wholesaler in Tampa making $1 million just doing what I'm talking about. He finds properties and he wholesales them. I was just talking to my friend yesterday, and this is one reason why it made me want to do this podcast. He has his partner, well, not his partner, but he's a real estate agent. She is too. So some girl in his firm, she made $550,000 in the month of August just wholesaling properties to this hedge fund that I mentioned to you. You know what I mean? So we know this hedge fund because obviously we've been doing business together. So she made $550,000 just flipping property to a hedge fund. It was single family homes, commercial, and multifamily homes. So anybody can do this. And she just got into real estate. She's probably a year into real estate and she made $550,000 off straight wholesaling. She didn't sell, she didn't flip a house, she didn't do anything. She just found properties and she sold them. You know what I mean? So that's what I think you guys should be doing. I wouldn't be worried about fixing and flipping. I mean, I wouldn't be worried about what you see on TV, because that's great, but they don't really show you all the other things that come with fixing and flipping a house. Because if you buy a house that's $80,000, that happened to me. That's how I had a house in Augusta. I got it for $82,000. The inspector went out and was like, "Oh yeah, the house is good. The roof is fine. Everything's fine." There was a little part of the roof that needed to be fixed. And so then I was like, cool. I went ahead and bought it. And then my contractors went in there And they were like, dude, the foundation is bad. So I had to end up spending 10 grand on the foundation. And then when we get behind the wall, because we seen a little bit of water, it looked like there was water damage because there was a hole in the roof. Not a big hole, but enough. So we were just thinking that it was going to be a quick patch. Once we got in the house, we tore the wall down where a little bit of the water was. There was mildew all throughout that whole side of the house. That cost more money. And then we had to end up replacing the whole roof. So and then by the time we got done with the house, people were complaining because there was not a fence in the backyard. So that was another $5,000 that I had to put up just because people didn't want to buy the house because they didn't have a fence in the backyard. And the house sat on the market a lot longer because of that. So here I am. I'm carrying this mortgage. I'm putting more money into it. And this is a house that I thought was just going to cost me 20 grand after I got the inspection, so I didn't know and realize all these different things until I got in the house. When you buy houses from people that are in pre-foreclosure, you don't have to worry about any of that because you can pick and choose which house you want to buy for one, and then you can just flip that to somebody else. If there's enough equity in the house, if there's $25,000 worth of equity, you can take 3 or 4 grand. Don't be greedy. I think that's the issue that people get. And that's what I ran into with wholesalers, right? To go off on a tangent real fast. Some people get hurt in the game because there'll be like 25,000 worth of equity or 30,000 and they'll want to take 10 grand. Why not just take 5? Why not take 3? You didn't do anything. You got a house. You went there, you knocked on the door, they called back. Why not just take 3 or 4 to $5,000? Why do you have to take 10? Take that $5,000, move on to the next house because it may be harder for you to sell that because the person might be like, well, 15,000 is not enough for the risk that I'm about to assume, depending on the type of property. So don't get greedy. So that's what I mean. Like if you can get a house under contract, go flip it for 5,000. You didn't do anything. You probably put in some time behind a computer, some sweat equity to find a house. You found it, you got it under contract, you flip it for $5,000 in 2 or 3 days? That's decent money. Your expenses, depending on where you are, can't be no more than $5,000. So just think if you do that multiple times, if you do have a job, you can supplement your income. I have a course. It shows you how to quit your job in 21 days. And I break down how to use wholesaling as a strategy to quit your job in 21 days. You can literally quit and supplement your income in a matter of 21 days with just wholesaling properties like what I'm telling you right now. So I think, again, this is why I think this should be the strategy moving forward because there's a lot of opportunity there, whether it be through selling it to InvestFar, selling it to a real estate investment club, joining a meetup group in your city, or you just having family members. Everybody wants to get into real estate right now. Everybody wants to become an investor of some sort, whether it be in the stock market or real estate or crypto. So either way it goes, I think there's a win-win in the scenario. Even with the pre-foreclosures, it's really not your job to do title searches, but I think if you can, you should get a program called Title Pro 24/7. Just Google it. That's a good program because we did that same thing. Before we got a house under contract, if it's in pre-foreclosure, we would go look and, run the address and see if there was any kind of title issue before we bought it because it could be in pre-foreclosure and you can see if there's multiple banks on the property or whatever the situation is. You can see how much equity is in the house because you can go in there and see when they bought the house, if they refinanced it, if there's another person who's also trying to put them in foreclosure. You can find all these things. So I think you guys should do Title Pro 24/7 or any kind of title company you think. But I just like that one because it's really it's low cost. And they also provide leads that you can buy from them. It's called Black Knight. Black Knight is the one who created that software. Black Knight is where we also get some of our leads from. And they'll send them to you via email. You plug them in. But again, like I said, I think Zillow changed their filters. But you used to be able to go to Zillow and just filter for these type of properties. But I think they changed that because it was probably, I don't know, I don't want to say unethical, but it was there. But I can take a look at that and get back to you guys on that. But I think this is it, man. I think I'm giving you guys the strategy for the next 2 or 3 years. And it's the gateway. This is the gateway to real estate, in my opinion. It's low cost. All you got to do is go out there and buy some stamps, and you got to put in sweat equity. It's the cheapest way to get into real estate. And then once you build up your cash in the bank, then you can go out there and, become a flipper if that's what you want to do. But at the end of the day, you want to get into multifamily. You want to get into 16 plus doors, because if you get a single family home and you're renting those single family home out, if you do have a mortgage on it, then if no one's living in that house, you have to carry that mortgage and you have to carry your rent at your place or your mortgage at your own place. And if you don't have the money to do that, then you're screwed. But if you have like a 4 unit, a 16 unit, or 8 unit, if it's 75% occupancy, then you still have enough money to cover the mortgage. If you have a 16 unit, that's obviously way better, because it could be 50% occupancy and you still have enough money to carry the mortgage and still cash flow. So I don't think you should get into this whole single family rental mentality. I think you use it as a tool to get you into bigger deals. So do as many deals like this, or wholesale as many deals as possible. And then once you start accumulating your cash in the bank, now you can go out there and say you got 50 or 100,000 in the bank from doing wholesaling and these type of deals. Now you can go out there and put 20% down on like a 16 unit. You know what I mean? If it's, $1 million or something like that, you partner up with a couple people and you guys pool together and you put the money in. You know what I mean? $100,000 will get you a nice property. That's 20%, that's $500,000 house. Apartment complex or multifamily. If you get a loan for $500,000, you can get at least 20 to 30 unit in like Georgia or Mississippi or somewhere like that. Somewhere in the South, you can take $500,000 and buy something nice. And then you just put the 20% down and you get more units. So this is kind of why I'm saying you stack and stack and stack and stack. And then you go out there and you take that money and then you leverage debt. And that's how you really get rolling. That's kind of like what Grant Cardone does. Well, he syndicates deals. He goes out and he raises funds from people and he buys deals. But what I'm saying is, if you want to do it on your own, you partner up with somebody else and you go out there and you get $1 million loan. They put up $100,000, you put up $100,000, and then you desk with them. That's when you're really getting, that's like buying a 60 unit, 70 unit apartment complex in like Houston or something like that. That's when you really start rolling. So guys, I wanted to hop on here and give you, the strategy I think and what I'm going to do. Again, this is not investment advice, but this is what I've done. And I know that the market has cycles, and this is the cycle that I believe we're coming up on. And even if the Fed raises rates, it's still going to be a good strategy. Even if they don't raise rates, it's still going to be a good strategy. And it's just going to be way more opportunity if they do. So this is what I would do, guys. Go out there. Again, if you want to know how to do this, if you're like, man, that's a daunting task, I need more information. That was a great idea, but I need to know how to do it. Go to residualroads.com. Sign up for our novice course. It's like $550. If you can't do it now, do it with your tax return. But I think this is what you guys should be learning how to do. There's also other programs that are more hands-on. We give you different templates. We give you all kind of things. So this should be your strategy for the next couple of years. If you want to retire in the next 2 or 3 years, it's funny because I was telling somebody the other day, I want to retire. I could retire right now. I'm like, you know what? I'm going to move to another country and just do one deal a year and not worry about anything. Because in essence, obviously, money in USD, you go to Colombia or Mexico or Spain. If you do one deal like I explained it with $43,000, that'll last a long time in Colombia, Costa Rica, Mexico, Argentina. I don't know about Europe per se, but any of these other Latin American countries, you can go to Asia. There's places in Asia that you can go to as well. And just do one deal a year. You know what I mean? One deal like this a year will have you set up. So if you guys found this podcast helpful, I'd be greatly appreciative if you shared it with your friends, trying to get this information out. And go out there and do something great. I will see you guys on the next episode. Take care.
Aren't you ready to start a business or grow your real estate investing portfolio? If you answered yes, allow Andre and the expert advisors at the Residual Roads Business Institute to fast track and put you on a path to full-time investing. The greatest transfer of wealth in our lifetime is occurring over the next few years, and you can take advantage if you know what to look for. In order to be successful at real estate investing, you need to learn how to leverage your current resources to generate quick money, big money, and retirement money. Let Residual Roads advisors craft a plan to get you through these phases using little or no money in 6 months or less. Don't wait for a job. Create one for yourself and others. Go to residualroads.com for mentorship, and for our free course, go to residualroads.thinkific.com.